Hello and welcome to the Wednesday check-in brought to you by David Gokhshtein and the Gokhshtein News Network. I am your host, Landy, and today is January 21st, 2026, and we are looking at Bitcoin. We did see the downside moves that I was talking about to the areas of interest that were discussed in the prior videos, and this was not that big of a surprise. Now, of course, if you were watching, you were aware that these moves were very highly likely based on certain conditions, right? And in the prior video, I laid out those conditions, right? So on Monday, I essentially said, so Monday we were right around the basis band for the Bollinger Band set here, but in relation to support and resistance, we had tested down to into the 92 to 94 zone, and we had a low come in essentially right at $92,000, thus fulfilling the target. The next area to look was essentially 89 to 90, and if this $89,000 area was lost, where were we going to go? Well, the next low side structure, and that's essentially what we have now hit almost in the Wednesday candle. Now, of course, it's still Wednesday for me, but the Thursday session is open. And we do have a broken structure here, meaning that we had an uptrend and now we've had a trend break on a closing basis. So we do need to be aware of some of the conditions to look out for to the upside for a possible trend reversal and where things might change and what the trend might look like if it does begin to change, either to a downtrend or a deviation, lower low, or a potential move back out of this area to form structure in another uptrend. So we're going to discuss that a little bit, but I wanted to kind of show where things are in relation to our weekly areas of interest. So I believe, where do I have that? Yeah, here we go. So this is the giant mess of a chart, but is essentially a combination of some weeklies and a couple of key daily levels. And in reality, Bitcoin fulfilled the upside target, right? It fulfilled the moves to 98 to 101, which I had been talking about, anywhere above 93.5 on the weekly to look 94 to 96. We got that move over here, right? After showing that we could close above, we came back down and held 89. In fact, we held above that swing higher low, which is 89. It's like 88.7 to $89,000. But more importantly, Bitcoin showed, the bulls showed that they could close above that weekly at 93.5, came back down for a test, came up to that 94 to 96, and then above there we were looking 96 to 98. We came just shy of this weekly overhead, which to be fair is above 98. It's at 98,225, but we essentially hit 98 here with 97,963.62 being the high here on spot. And where was I looking back to the downside? Well, essentially $2,000 at a time back to the weekly at 93.5. And we did get that move. And then once we lost it and closed inside of the weekly here, it was all about coming down, 2K at a time, right? 90 to 92, or essentially 89 to 90, and then 92 to that 93.5, 94. We got 92, and then we went for 89, put in a break below this low. And I'd mentioned if we were going to break below this low and this line right here where we had the common swing higher low and lower high, they were likely going to test this next area, which was a higher low consolidation structure, and that has been fulfilled thus far. So what does that mean? If we do see price back down and specifically dropping the most recent low at around that 87, 150 area, I would look for, 86, and, even this low is fair game just above 86, but 86 to 83.5 to $84,000 is kind of the area of interest. If we see 86 being traded below, that's kind of the zone of interest between 86 and 83.5. If that's dropped, we would have to entertain trips back down to test the weekly there right around $80,000. Now, yes, I know that this is above $80,000. It's like 80,700. And we have the swing low there that has become the weekly low. and a lower low at that, which is going to be relevant to what I'm going to show you in just a moment. But that's around 80,500. Anywhere below there, it's kind of 78 to 80. Now, there is some interesting stuff to be aware of here. All right, so there is another weekly swing down here that we should highlight, just in case. We're in the week half, or we're in a weaker position right now. So not a week half. We actually closed above 89. But if we close anywhere below $90,000, we will set a lower high, right? Which is a trend reversal setup. So we should be aware of this zone down here. And not doesn't mean that it's going to get hit, but it's a high probability if we do see a lower high on the weekly, right? At minimum, a test down to that lower second standard deviation, which I'm going to turn on the Bollinger Band set here in just a moment. But if we do see anywhere below essentially 78 to 80 as a zone, we can entertain this swing down here just below there at around 76.5, 76,555 there. Now, anywhere below there, we're looking mid 70s down to that 74, 420, 69. And then below there, you know, there's likely a drop down to, you know, test the prior highs where we had like just above there 70 to 72. And then it's down to another big point of control area between around 68 to 70. I'll just call it 68 to 70. We'll probably refine that as price would get there if it does from here. But, you know, you can call it 67 to 70, 68 to 70, but basically somewhere around the prior cycle all-time high. Now, we should watch this, and of course I'm going to follow up on Friday with, you know, kind of the conditions that need to be met. But we should watch this this close this week very, very carefully. All right, because $90,000 is the area where we would see a lower high confirmed. So we would have a trend break, right, to a lower low, a little bit of a you know, higher low swing structure down here, but this is a bear flag at this point on the weekly. And if we get a lower high, that would be your trend reversal setup. That doesn't really, you would see a lot of confirmations come in on closes below like 80, 86.8, 87. But realistically, I like the swings a little bit better. It's a close below the swing to confirm that trend reversal setup. Now, this is where, you know, we would be entertaining moves lower, but how much lower initially if that were to happen? And that's where we can kind of get a gauge for that with the Bollinger Band set. And I wanted to point out that the lower second standard deviation this week is at this swing low right here, right at that 76,555. But, you know, it takes time. If this were to confirm a lower high and then head lower through these levels, this is very likely going to be around that monthly high or low at that 74, 420, 69 here on spot, and maybe even lower. But I would still be looking for a weekly upside move, not something like this, but like a concerted, nice weekly bouncing structure, and kind of see where it comes from there. Even if it's within the midst of a downtrend, get people really excited. You definitely see that on X. But in this case, that's where, you know, we would get likely the expansion, the initial expansion, and then a retest of wherever the lower second comes in. Likely that's going to be confluent with areas of support and resistance and volume and like all that kind of stuff. But it's really going to be about the next big bounce, because this would be the lower high if that did confirm on closes below $90,000 now. If we don't see a close below $90,000, or if we just see, you know, Bitcoin try to swing and put in higher low equal low structure, that's fair game as well, right? So understand that it's not over till it's over, and it takes time even for bearish setups to play out. If you're bearish, right, it takes time for bullish reversals to set up. And what would a bearish continuation look like? Well, it would be putting in a lower high here, and then coming down and continuing the trend lower. So it would be something along the lines of this, right? You know, wherever that would come in, that would be your trend reversal lower high to then continuation to the downside. But there is always the scenario that could play out like this, right? Where we get something like the lower high, and then we get a higher low or equal low structure, and then that takes out the most recent lower high. That's your classic W formation for trend. And then, you get your trend reversal setup, would be the higher low, equal low structure. And then the confirmation would be back above the most recent lower high. And that's kind of, what we have to start entertaining now for price action for Bitcoin is one of these two scenarios to play out, or something along those lines, a variation of a scenario like that. Now, the week is not closed yet, right? So we don't know if this is going to confirm a lower high this week or not. Just something that, of course, I'll remind you of on Friday. But what we do know is that we have a setup here on the daily for a trend break, right? And that's where we can do the same thing here. So we had the nice little uptrend here, right to resistance. So be aware of a structure that kind of plays out like this. This is just an example. Lower high that takes out the lower low. That would be your trend reversal setup. And then confirmation would be below the most recent low. Now, obviously, in lower term timeframes, people like myself and others that are trading this actively would be getting into short positions. Now, I'm already in a short position. I've taken some profits on the way down. I haven't fully closed that. It is a swing position. So it was a scalp at one point, and then that turned into a swing position. And what I would be doing on any kind of bounce up from here is actually hunting for another daily area of resistance that could turn into a lower high to continue to build out that short position. The market is still predominantly long pay short, so you're getting paid to do so in a lot of cases. I'm not telling you what to do. I'm telling you what I typically do in these scenarios. And I was paying for longs through here and paying for longs through here, and now they're over. I don't see opportunity yet, outside of like really low term time frame scalps, for any kind of a major change just yet. And what would it look like for Bitcoin to put in like a bullish setup from here? Well, this could either become a deviation, right? So a lower low to a higher high, go test further up, some further resistances, 98 to 101, start getting above there to 102, 103, 650, and then above to the 105 area, 104, 105. And then the really big one would be that 107 to 108, that higher low that was holding up the highs that we've talked about quite a lot. That would be a big inflection point for a lot of people. Now, again, I mentioned this on Monday and many other videos prior to that, that really above 112 is really, that's the only place that you're really going to see a true short squeeze, where there's some panic on the short side, because it's all covering into those areas up there. Everybody will call it a short squeeze, but it's a lot of short covering, just like there was short covering even locally into that $98,000 area. So it's really a true squeeze. I don't think even would happen above 107, 108, but I know that would be a bear market invalidation for a lot of folks that have called a bear market already. And I'd still be looking at 112 like, yeah, and even 116, And a lot of that's because the weekly band setup is not a setup that you'd want to see price rocketing back to the top side, even to 107, 108 up here. It's just not. It's set up and it's a bearish band setup. It would be bearish all the way, even if it made new all-time highs, which you would need to see as a compression to expansion to the upside. And right now we don't have that. So we'll just have to monitor price in that manner. So from the daily perspective, this could become a deviation, right? It would have to take out the $98,000 high from here after setting a low, if it does set a low. Something like that, if this was the low, which I'll give you the criteria for evaluating that in just a moment. Or it's got to do something like a lower high, higher low, and then higher high, right? Get that trend reversal set up, your typical W pattern formation for W for winners or whiners, because typically most people that get into setups like this get caught up here. They sell down here, and then price takes off on them back to the upside, and they get left on the sidelines. So I'd like to call it the whiner setup. Now, where would this kind of set the low? Right now, this would set the low on closes above $90,000. So $90,000 is still the pivot area, 89 to 90 being the key area right here. And above there, 90, then we can say low set, and it's all about, do we get a lower high, prior to getting to 98? And then that would be, your trend reversal setup for the daily. And you'll see a lot of people hunting that if that does occur from here. Otherwise, it's just continuation to the next levels, right? 86 being the primary area on the weekly, down all the way to 83.5, $84,000, depending on how you're charting. There's a lot of liquidity down there. So yeah, that's Bitcoin in a nutshell right now. Look, there was a lot being made about, oh, it's all because of the tariffs, this and that. I wanted to point out that it's not really because of the tariffs, and there's a few different narratives going around that just kind of irk me. What was happening on Sunday into Monday, remember Monday was MLK Day here in the United States, so markets weren't open, but we had a giant spike in the 10-year, in the bond markets for Japan, because there was some uncertainty going on there. They have indicated now that they aren't going to do a rate hike, but there's some political uncertainty there, and there was a weak auction. So when we saw that, that was on Monday into Tuesday, global markets took a step back, right? And then also global bond markets saw, the 10 years and up, kind of all across the board started to really move up because there was a sell-off. Once there was a statement out by the BOJ, things kind of cooled off, but this can still continue much higher. So it was more about the uncertainty and the in the moment kind of processing from Monday and that lag catching up into Tuesday. So now that that's kind of behind everybody, along with kind of the tariff stuff, remember tariffs got pushed back again by the Supreme Court. There was speculation that on February 1st that Trump would slap, 10% tariffs on some European nations. And now that has subsided. That's all lower term time frame volatility. A lot of this structure was built long ago. All right. So just understand that it's this moment to moment, tick to tick kind of fervor that you see on the timeline is not really reflective of reality in the markets, right? Markets are forward looking. And when meaning that they've already been looking at these moves far ahead of time. And when you see the lower term time frame volatility, that is just the in the moment reactions, and typically don't have major structural changes outside of the trend that's already ongoing. Although it can set up for reversals if it is a big enough global event or a big enough local event for something. Let's go ahead and take a look at commodities. Gold hit our targets to the upside. 48.50 was the big area on the weekly, and I said, it could even push further. It did push further. 48.88. Nice. Almost 4,900 for gold. And I've said, 5K is kind of in the cards for gold. And above there, we can look like 51, maybe even 52, being the next bigger area. It's probably due for a correction soon. But what I will say is if you note down here, BBWP for volatility still has room. It's at a 94 over 87. So this has room to cook. And I think 5K is realistic. And then above there, 51 to 52 is fairly realistic. Now we have seen some good price action up at the highs. We're getting a little bit of a pullback in lower term timeframes. But I've said this before, and I maintain this. It's all about this higher low on the daily now. It can come down. It can gap fill at 46. It can do all kinds of fun stuff. If it's holding 45 to 45.33, it's fine. If it does get below the moving average, which is the basis band here, then, maybe it, bounces to a lower high or something from there, or breaks structure and then puts in a lower high. And then we can start entertaining a wider correction on longer term timeframes. Or, maybe we just get a quicker correction on the daily. But right now, the move is still ongoing. And if it loses right around 47, so 46.72 on the daily, I would say 47 actually. If If it loses around 47, we can start to look for a correction for a gap fill back to 46. And that's where then this low is now in play around that 45.33 right off the 2414. Nice, beautiful retest of the close open that was right on that fib. And if it gets below there at 45, 45.33 here, 45 area, then we can entertain corrections back down to 4,400. So silver step back after hitting some of our targets to the upside here. We got 95.86, right? So we talked a little bit about this. Keeps failing to put in the highs, but this now has put in a high. So this is a high side structure. But above, 88 here to 90 is kind of the zone. If it's above there, it can keep grinding out to the upside, 98 to 100. And then above there, we can entertain moves to that 103 fib. And I would give it room to 105 even. So the 95 to 105 is kind of my zone up here. And this is local top picking right now. That's what I'm doing. There's nothing up here for us to really reference. So it's more about defining the conditions that we're looking for using fibs, volatility metrics to kind of see where we're getting those confluences. And at the moment now, above 88 to 90, it can keep going to the upside and testing further up. I do think we're going to be in for a larger correction sooner rather than later for silver. Unless we see it just rocket right up, then we got to wait, right? And that's where we would get 98. If it hits 98, that's where the upper second is. Just be aware that that could turn into a reversal setup, much like we reversed off of the upper second here prior. But you can even see the upper third now pushing 106. So, this can keep grinding. If it does correct down to any kind of really important areas below 88, I'd be looking right towards, that 83.75 right off the 1888 here to 85. And then below there, it's all about 80. It's all about right around 79 to 80 bucks. If it does lose that, then we start looking to, the 77 to that 73.85 area. And as long as it's trading on longer term time frames above 70, it's fine to keep plumbing the highs and chopping around, even if it goes into a consolidation structure. And so everything's been playing really, really beautifully. When looking at Dow, this was a pinprick right on the highs at 48.31. That's now where the lower first is. And this is where we did get a lower term time frame bounce off of that basis band. And then it was right down to the lower first, test that high, and then right back on up above the basis. Be aware of around 49.360 to 49.4. That could be a rejective area, but if it is able to get back above there, we can start entertaining the highs up to 49.8, maybe even 50,000. Right, and the upper third showing 50,000, definitely above 50,000 is in the cards, up to 50,000, almost 350,000, 270 in this case. If we do see this area drop though at 48.4, I would look right down to, 48. Right, that's the big area, lower second. If it loses the low at 47.850, so you're kind of looking 47.850 to 48. If it loses that area, then we're looking for a wider correction to the mid 47 region down by the lower third there. Looking at NASDAQ, we did get an expansive look. So we did reverse off of the lower second, lower third zone, lower term time frame bounce that got rejected off of that area that I was warning about. Just be aware of those lower term time frame bounces. But in this case, what did we see? So we see a structural change, the higher low swing here. Well, this was actually a lower low swing and a lower low close. So that's my miss on that in this consolidation structure. But realistically, what we're talking about here is we lost the low here. We've regained it, and now we're rejecting off of the closes here, right around the closes by the basis band. If we do see it drop 25 again, and we did get the 24.9 area, 24.950 to 25, pretty darn close to what we were talking about, right? If we lose it again, We can look at 24.5 being a really big area, 24,650 down by this close. And then it's right down to the lower 24s into 24 even. And then we start looking over at this major area from November of 2025. And that would be on expansion. To the upside, back above, 25.5, we can start entertaining trips back to the top side here, 25.7 to that 25.875, 25.9 region by the upper second. If we get any closes above there, we can start bringing the highs back into play. Around 26 to 26.2 is fair game. SPY or SPX, just add a 0. Same deal, same look as NASDAQ here. Drop the higher low structure, which would be technically this was the higher low, this was a lower low. And again, that's kind of my miss, but essentially this was the low to pay attention to. And this is also where we closed below, because it was the most recent low and it was a lower low. So lower high, lower low swing with a higher low close. And then it was down, right down to the lower second. We had the lower term time frame bounce and then sell off into the lower second, lower third zone. We essentially hit that 675, which was one of the areas, 670 being the other big one. Around 670, 671.40 here at this low, but I would say 670 is fair game. To the downside, still anywhere below there, we're looking, 665 to 660 down here in this zone. But back above 688 to 690 on a close, back above the basis, we can start looking to, 693 to 695, 696 area. Anywhere above there, we're looking 700 pretty easily. And then if it was going to get continuation, 705 is kind of the next big area to pay attention to. That's pretty much all I got for you. I know a lot of people are going to make, I don't really want to get into a really long bond conversation because, look, that's just not what I've been doing in these videos. I typically reserve this for formats like Spaces events. And I do think it's going to become more relevant this year. So I might start priming you all on how the bond markets work, what to pay attention to globally, how that relates to, how countries and how players in the game, hedge funds and so on and so forth, buy debt. And that I think it's going to become more relevant this year as many nations are going to become a little bit more self-reliant than in prior years. And I think we're going to continue to see that trend. And that's really borne out through, taking a look at commodities. It's fairly simple. Now, that also is going to have, it's part of a wider monetary policy discussion. And it's not just about the United States. Okay. So like everybody pays only attention to like, what is the US doing? Well, yeah, because it's a global reserve currency, right? But in reality, it's about what are countries doing on the geopolitical side of things as it relates to economic policy, right? Because that's what's going to reshape things. And we're in that reshaping time period now. And I think that's going to really start to accelerate going forward. So, and I think this is the year that it really gets interesting. And I think it will present a lot of opportunities for traders. And we'll see if that results in opportunities for investors, right? So if we see, good movements in something like, what am I looking for? VIX, there's obviously going to be opportunities there. And typically when you see VIX low, we see, the lower the VIX is, typically the higher the equities markets are going to be, typically, right? And then the higher VIX is typically provides for opportunity, meaning that the equities are usually selling off, right? So it's that's a traditional way of looking at it. And when we get the sharper moves up and expansions on dailies and stuff, VIX will go with it. But typically markets like to grind, like your SPY, your NASDAQ. You get the big moves in Dow, SPY, NASDAQ, and you'll get those big moves up and you get the initial volatility spike, and then they just start grinding and and heading up, right? And building out structure. And then VIX kind of cools down. And VIX was cooling down at the highs, got that big volatility spike, and that is this volatility spike down. And usually those will provide for opportunity. Like last year when I was talking to you all about the Q1, or it was prior to that in 2024 Q4, I was talking about the Q1 to Q2 transition, new administration, new policies. Markets were setting up for a correction either way, no matter who was elected, right? And then we got that sharp correction. Obviously, everybody talking about tariffs and the big realignment globally and how it kind of shakes up the old guard, right, in the financial world. And realistically, I think that was going to happen either way. And that's what I was projecting, no matter who was elected in the United States. But we had a Six Sigma event, and that Six Sigma event provided for a lot of opportunity. And that's really what a lot of investors are waiting for, is like a really big Six Sigma event, right? And in the lower term time frames, you can still find value in some of these less violent moves as well. And but realistically, if you're a long-term investor, the less violent moves aren't as interesting. You're just going about your normal investing plan. One of the big things, though, that you should do is you should have cash on the side. You should always have cash on the side. And everybody goes, well, why would you have cash? Cash is always devaluing. Well, because when you do see that Six Sigma event, you want to go in and you want to get more of the things that you like, right? And I just, not obviously that's not me giving you any kind of financial advice. Seek a financial advisor and blah, 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 blah. But if you're going to manage your own portfolio, have a plan, have some cash on the side, right? For those larger volatile moves. And a lot of people are going to be looking at this like, oh, it's such a huge move and there's so much news about it. And that's the one. And it's like, no, don't blow your cash wad on that one. Wait for the really, really big ones, right? We had October of 25, we had, November, but then you have the Six Sigmas, and that's where we were getting into that Q1 to Q2 transition. That's your Six Sigma right there. You're hitting, above 50 on VIX. Those are the ones where you want to start, taking a look around and executing your plan for accumulation in markets. So, and that's it. That's all I got for you. I hope that you all had a wonderful day in between me talking to you. So a wonderful Tuesday. And I hope you have a wonderful Thursday. It's Thursday for most of you, and a wonderful rest of your Wednesday if you're here in the U.S. And a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care. I'll talk to you Friday.